And remember, every market participant worth his or her salt was at that CFA conference, for which ET now was an exclusive partner. So we rounded up a few more of those sound bites for you. Hear out what Reliance's Sunil Singhania and Ambit Saurabh Mukherjee had to say as far as the growth opportunities in Asia go.
India is one economy where the GDP growth has only started. I think if you look at Japan, you look at Singapore, you look at China, you look at Taiwan, when the GDP growth started to show numbers of 7, 8, 9%, it happened for 30 years, 25 years. I think in India we have only seen 10 years, 12 years of 7, 8% GDP growth. And our belief is that this growth of 7, 8% plus is going to be there for at least another 15, 20 years. So this demonetization might impact 2, 3 months, maybe 6 months if you're a pessimist. But ultimately we know that India, the growth is here to stay. And I think if there is going to be growth, there is going to be money made in companies which are going to participate in this growth. And you mentioned about equity, interest rates coming down. I think interest rates coming down are good for consumption. They are good for companies' profitability. At the same time, I think all the investors have to realize that the days of expecting 20-25% CAGR returns from equities are behind us, and we should be happy with the 15-17% returns from equities. So our call would be that we are still in for equities, and in fact last 1 year has been such a difficult year, and as of date all the mutual funds have given between 12 to 15% returns. So in a difficult year, equities have given 12 to 15% return. I think the second asset class would be commercial real estate. I think the rates are good. Yields are 6-7%, and in a declining interest rate scenario, if you're assured a 6-7% annual return with possibility of capital appreciation, it's a good diversification away from equity. So equity definitely number one, and commercial real estate would be my second choice.
2017 is a year of uncertainty. Can we see negative returns across all asset classes, bonds, equities, real estate, commodities? What do you think, Aaron? Is that scenario on the cards, negative returns from all asset classes?
Well, I think if you that's going to be pretty unusual. I think you will have, if you have a negative inflation surprise either from the supply side or from a non-anticipated rise, that potentially could, with non-growth obviously, that could be a negative or a huge policy mistake, which I don't think is going to happen. Because I think it's been mostly a risk-off trade for the past 2.5 years. And so I think that the market is cautiously optimistic, and I think we are not irrationally exuberant except for certain parts of equities. I think people are still very aware of the risk around, and they have taken insurance, and I think they've taken hedges. So I don't think that's going to be a negative returns all round. If it turns out negative, it will be a slight negative. I don't think it's going to be a huge negative unless there was going to be a credit rationing.
Okay, still ahead here on the show, we'll cross over to Ruchi, who will of course walk us through all the national stories where the fate of the faction-ridden Samajwadi Party is